So in the overnight session, sellers were active at yesterday's broken initial support, which was acting as resistance. And now heading into the open, our short-term bias will continue to be neutral bearish, and we're going to be using 5,075.75 to 84.75 as the initial resistance, as well as the micro bull bear zone. So holding below that area tells us that the sell side is still in control, and a break and hold above that zone would be an indication that buyers are now starting to regain control, at least on the smaller time frame. And a successful breakout above 5,084.75 can result in a test of the 5,096 to 5106 area, where sellers can still be active on first test, and a breakout above 5106 would be an intraday bullish indication. Now, in order for the bullish scenario to take place, we will first need to see a breakout above initial resistance and the micro bull bear zone. As long as we're holding below that area and we are not seeing any obvious signs of intraday strength, the simple approach would be to still give more weight to the short side and assume that the sellers are in control. And then on the downside, we have pre-market support at 5,060.75 to 65.75, and a breakdown below that zone would be a sign of intraday weakness, and that can then lead to a test of the initial support at 5,047 to 56, and a break and hold below initial support would be needed in order for us to get an intraday bearish confirmation. And in order for the market to continue selling off, we will need to see continued weakness in the other markets and sustained downside momentum. This is where we have to really be focused on the principle of initiative versus responsive, because even though the market has been quite weak over the last 3 to 4 days, it's also getting overextended to the downside, and it's not too far away from some significantly better areas of support. So as the market pushes lower towards better and better areas of support, we will need to become more defensive and cautious on the short side. So with our short-term bias being neutral bearish, that means that we are giving more edge to the short side at good trade location. And in order for us to take a short at more aggressive location, we need to see clear signs of intraday weakness in real time. And again, on the downside, we need to see signs of initiative selling in order to get a break and continuation lower below initial support. So in the event that sellers hold ES below the micro bull bear, and then we get a proper breakdown below initial support on broad market weakness and sustained downside momentum, that would serve as an intraday bearish confirmation, and that can then result in a test of the 5,030.5 to 38.5 area and 5,018.5 to 25.5, and buyers can be active at either of these areas of support, and the lower the market pushes, the higher the odds of responsive buyers stepping in, and we would need to see trend down type conditions in order for the market to continue selling off. So given how overextended the market would be getting on a continuation lower and the type of support areas that it will be testing, there is now going to be a higher probability of larger time frame buyers starting to step back into the market. So we could see that as early as 5,030.5 to 38.5, and there's a higher probability of that happening at 5,018.5 to 25.5, and in the event that we continue heading lower, the 49.97.5 to 5,006.5 area is a very good spot for buyers to step in. And so far, ES has been running on below average volume, and if that continues, then it would imply that we could get a smaller range on the day. So now I think we need to be a bit more careful and cautious on the trade setups that we consider. I think that the last couple of days, the trade setups have been quite obvious and very textbook. I think today could be a bit more challenging. Again, you don't have to overcomplicate it. Keep it simple. Below the micro bull bear, the sellers still have potential to remain in control, and a break above it could shift that intraday control. And then in order to continue selling off, we'll need to see some decent and sustained downside momentum, and ideally the other markets also taking out their recent lows. And then once the market gets overextended to the downside, Keep in mind that larger time frame buyers can step in, and if in real time you notice a momentum shift off of one of these lower zones, then that could mark the low of day. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the initial resistance and micro bull bear zone, as well as the pre-market and initial support. That will help set the bias and tone on the day, and we'll take it from there.